Hey guys, Joel Franklin, market analyst for YouTrading, and in today's video, we're going to be taking a quick look across markets. I'm going to be giving a quick update as to what's been going on this week. And to sum it up, not really that much has gone on this week. It's been a very, very slow start. Monday, markets were pretty much shut. Tuesday, we saw a bit of action, like we saw. In fact, let me just bring up the Dixie real quick. We saw the dollar spiking higher, although we've seen a decent chunk of those gains that the dollar saw on Tuesday given back already. Now, why did we see those gains on Tuesday? There was literally no fundamental catalyst at all. People were saying that potentially people were just overly short on the dollar. And, the move yesterday does not seem to have changed the trend really, which I think remains very much towards further dollar downside. Let me just bring up another chart actually into the picture. You can see here that US yields are on the back foot at the start of the year. Let me just show you the US data as well. We've got another print ISM manufacturing PMI that shows the US manufacturing sector in December in contraction. So we've got more evidence of a weakening economy. We've got pretty much all of Wall Street expecting some kind of recession in 2023. So we're clearly moving towards a weaker US economy, which is weighing on yields, weighing on the dollar. The Fed, for now, still talking a hawkish game, but at some point, if inflation is coming back very, very quickly, as it does seem to be at the moment, and if the labour market starts weakening, which it doesn't seem to be yet, but if it does, then the Fed might be sounding a little bit more dovish, and that could really pull the rug from underneath the dollar. But for now, it seems like it's more of a slow creep lower. And I'm sort of expecting the Dixie to continue heading lower within this sort of trend channel. Like the 21-day moving average here, just above 104. That's a tough one to get above when you're in a downtrend. Just whilst we're talking about Forex, probably worth looking at a couple of other majors like Euro Dollar. You can see that Euro Dollar has had a pullback, but you've got these trend lines here which are pointing higher. This pace of gains here, there's no perfect trend there really, but this pace of gains that we saw in November and then even in early December, it wasn't possible to keep that up, and we are back below the 21-day moving average now. But you've got a lot of people thinking about adding longs. So yeah, something to think about. Cable still struggling around its 200-day moving average. Optimism around the pound is still pretty weak. So if it is going to move higher, it's going to have to be a dollar-driven move. Optimism around the yen has been growing though, and as you see US yields falling, that should be good for the yen, which is sensitive to the rate differential between the US and Japan. Dollar yen very much seems to still be in this downtrend that you can sort of mark up roughly like this. And I'm very much expecting this to continue because we do have this hawkish shift recently from the Bank of Japan, which seems to be opening up the door for a potential move back into positive interest rates. So yeah, we've got some long run tailwinds for the yen, long run headwinds for the dollar, further downside in dollar yen, I would presume. Other asset classes, let's quickly take a look. Things have been range bound pretty much in US equities since the start of the week. We had some bad delivery data from Tesla, which weighed on market sentiment. You also got concerns about Apple's supply chain, which people were talking about, which is also weighing on Apple. Things are still range bound though, because like I said, you've got a dollar weakening, you've got yields falling, and that tends to be a positive for stocks. So that's holding us in a range for now. And markets really are just waiting now. Let me just go back to the calendar. We're waiting for Friday's jobs data. And as well, we're waiting for Friday's ISM services PMI data, which should be robust. In fact, both of these data prints on Friday should show that the US labour market remains in a state of expansion at least, although slowing. That's what people are hoping for anyway. They want to see the rate at which the labour market is improving, slowing, and the services sector slowing, but still remaining healthy, which pushes back on any fears that the US economy is in a recession right now. Definitely not in a recession right now if this data comes in as expected. It doesn't mean we're not headed for a recession later this year, though, potentially. FOMC minutes coming out later today. That's also going to be important. ADP non-farm employment change on Thursday. That's sort of a prelim for the NFP number on Friday. So yeah, we've got all these important jobs data releases coming out. We just had JOLTS, which is a bit stronger than expected, just under 10.5 million job openings in the US, well above the expected 10.04 million. So yeah, labour market in the US still strong, but we're waiting for more confirmation from more important data prints later this week. And this could all spark quite a lot of action in these markets. In terms of commodities, oil coming off quite strongly. I mean, why is oil slipping so much today? I mean, I haven't seen any fundamental catalysts for it, but the macro environment remains pretty unfavorable. We're still talking about major economies going into recession later this year, like the European Union, which might already be in recession, US, China. Yes, China's reopening, but they're going to have to deal with the health crisis now because they've gone away from zero COVID, which means COVID is spreading like crazy, which has its own chilling impacts on the economy, even in the absence of government mandated restrictions. And then heading in the opposite direction to oil is gold, which is rallying, like in the move lower in yields certainly, and the recent weakness of the dollar. I mean, the dollar strengthened a little bit this week, like we've been saying, but it's generally still in that weakening trend. So you're seeing gold pushing towards profit targets such as this 1880 level, which I certainly think it might be hitting soon. Although the pace of this rally probably not sustainable because we were in this uptrend. We were in an uptrend already, and now it's like we broke into the north of this uptrend. So, maybe some profit taken. But anyway, guys, that's pretty much the video. I hope you found it informative. And I will see you all in the next one.